$1 billion vanished from the digital economy, and no alarms went off. No automated alerts, no frozen accounts or panicked calls. On the surface, the operation was flawless. Thousands of investors poured capital into the ecosystem, signing digital contracts that locked in their funds for expected returns. But the massive cash flow was masking a void. The balance sheets showed exponential growth, but those numbers were entirely disconnected from any actual revenue. Every margin of profit was a fabrication. The executives running the platform showed zero signs of panic. They held press conferences, closed major partnership deals, and projected a practiced confidence that convinced the market they were financial visionaries. Top-tier financial regulators and law enforcement agencies regularly audited these platforms. They looked directly at the manipulated data logs, checked the compliance boxes, and moved on, missing the ongoing theft completely. The operation grew so large, it nearly integrated itself permanently into the broader global economy. Another few months, and it would be too entangled to extract without severely damaging legitimate markets. The real danger was the total, silent failure of automated safeguards designed to protect global wealth. The algorithms saw the stolen money, categorized it as legitimate growth, and effectively rubber-stamped the heist. The global monitoring network missed it. The break in the case came from an independent accountant who decided to review a single ledger line by line. Buried under perfect digital formatting, they found a fractional discrepancy in a routine timestamp, a 3-millisecond delay physically impossible on a local server. That impossible timestamp was enough to trigger a quiet inquiry. Without alerting executives, the FBI stepped in to examine the specific server node processing the transaction. Forensic analysts began tracing logs, finding match-in-millisecond delays, and mapping the data's path. Analysts identified a hidden script intercepting these very specific entries. Following the server path revealed hundreds of irregularities, originating from a single backdoor. This allowed an outside party to overwrite data in real time. The script manually adjusted financial graphs to maintain the appearance of growth during withdrawals. The criminal empire's entire illusion relied on this fragile web of altered code. When human scrutiny bypassed the algorithms to look at raw server logs, the structure crumbled. As the FBI dug deeper, they uncovered a secondary layer beneath the falsified graphs, a massive underground logistics network designed to move the stolen capital. The criminals utilized what investigators called phantom accounts. These functional digital wallets were registered to non-existent entities, serving as holding tanks for stolen funds. To obscure the trail, funds were shuffled across borders at blinding speeds. These routes dead-ended into corporate black boxes to break the chain of custody. Inside, the funds shattered into microscopic, untraceable fractions. Mapping these scattered data particles revealed the fraud's total volume, exceeding $1 billion. The heist functioned through millions of microtransactions. Each was small enough to bypass the detection thresholds of major banks, camouflaged as routine service fees. The global network's speed created a ticking clock. If the criminals realized they were tracked, they could delete the phantom accounts with a few keystrokes. This required an immediate, overwhelming tactical response. The fraud's success relied on blending into the background of global commerce. Broken into billions of tiny pieces, it became indistinguishable from legitimate internet traffic. Armed with a complete map of the phantom network, the FBI moved. Tactical teams executed simultaneous raids on physical server locations and executive offices before the operators could react. This coordinated global strike abruptly dismantled the executive network. Agents seized the hard drives, locked the administrative controls, and permanently severed access to the phantom accounts. The perpetrators were arrested, and the digital illusion of massive corporate wealth vanished. The platforms were shut down, leaving only the hard proof of the stolen billion. The immediate heist was stopped, but the systemic vulnerabilities that allowed it to operate remain fully intact across the global economy. Modern digital financial infrastructure is incredibly fragile. A single algorithmic blind spot was enough to compromise billions of dollars while passing every automated compliance check on the market. In an era entirely dominated by automated finance, software alone cannot protect us. Basic human skepticism and intuition remain our last best defense against a total systemic collapse.